this video we're going to help you determine the place order points from entry price value. So that's one of the parameters in your strategy, and you need to know what number to put there. So how far from the entry price should your order be placed in the market? Obviously you don't want the entry order in the market any longer than necessary, because if you're trading several charts you don't want to be using up your margin account value, and you want to put your entry order in when the price is getting close to your entry price. And how close is that? You must place the order when the price is still far enough away that the strategy has time to place the order. And let me show you what that means. What we have here is a Facebook chart, a 5-minute chart, and let's say you did some analysis. It's going down here and you said, oh, I believe that at 56.3 it's going to bounce back or reverse, so I'm going to take a long. So we have a B for buy, and remember it has to be a capital B and it has to have these little quotes, and we want to use a limit capital L with little quotes because the price is above our entry and coming down, and we want to enter once it gets down to that price. We are going to exit at end of day. I have false because we want to let it run, let it be a swing trade, and our entry price is 56.3. Place order points from entry price is 0.5, and we'll talk about determining that here in a moment, but that for this example we're starting with 0.5. And stop loss is 1, first target points is 0.5, second target is 1.5, third target is 2, and we're going to take a third of our shares off at each of these targets. So let's see what this does for us. So as the price comes down, we see it does go ahead and take a long, and we get our first profit and our second profit, and stays in the trade all day, and the next day it does take the third profit. Now how does this work? As the price was coming down, when we get within half a buck of our price, the strategy will enter the limit order down here. And when it actually gets down here, the limit order is filled, and we go ahead and take our trade with a profit. So let's see when this order would have been placed. The low on this bar is 57.6. So at this point, the strategy would not place the order yet because it's more than 0.5 from the entry price, which remember was 56.3. On this bar, the low is 56.87, so still too large of a distance. It's not yet within 0.5 of our entry price, so it doesn't place the order. This one has a low of 56.88, still too high. 56.81, still too high. Low of 56.37, it finally places the order for the next bar, and we do get filled on the next bar, and we buy our 100 shares. So here's a point that's very important to know. The strategy determines on any given bar what to do on the next bar. So if the price here is low enough to place the limit order, it's not going to place the limit order until this bar begins. So it makes a decision on one bar and places the order on the following bar. So I'm going to change this to a 20-minute bar, and notice that this trade takes place on 5/7, so we'll have to look for 5/7 once we change it to 20 minutes. Format symbol, change it to 20 minutes, hit OK, and here is the 7th, no trade. What happened? Well, here's what happened. On this bar right here, the low is 56.81, and remember our target is 56.3, and we're going to place the order in the market when it gets within 0.5 of our entry price. So this low is not low enough for us to place the limit order on the next bar. And that next bar is the only one where the price got low enough for our entry to occur. So there was no trade at all. However, watch this. Format Strategies, Format, and we're going to change this now to place it when we get to within 1.5. We'll place it when it's a little farther away from the entry price, and now we get exactly the same trade. It gets in, takes first, second, and third profit. So the moral of this story is you want to have your entry order placed far enough away that the strategy will have time to place your order for you. One of the things that can help you determine this is if you look at average true range. I've already inserted it into this chart. I'm just going to click status to turn it on. I'm going to turn on the data window so we can see the value of this average true range. So I'm going to the top, I'm hitting view and data window. And here's my data window. So at this point where we want to have the orders start showing up in the market, the average true range is 0.48. Here it is 0.62. Here it is 0.69. And a good rule of thumb is to place your order at 3 to 4 times the ATR distance from your entry point. So if we're going to format the strategy and we see that what we're getting in at 56.3, and say we thought, oh, our average true range is 0.7 and twice that is 1.5, which worked for us, but to be safer you'd want to put in 2.1 and make sure that your strategy has a chance in case the bars suddenly get taller, right, in order to make sure that your entry actually gets into the market. Another point I want to make is if the price should come down, place your order but never get filled, go up, then it comes down close again. When it goes back up, the entry order will disappear. When it comes back down, the entry order will appear again. So your entry order should only be in the market when you're fairly close to your entry price. So whether or not that really made all that much sense to you, you can always use this rule of thumb. Set place order points from entry price to 2 to 4 times the average true range, and you should be good. In the next video, I'm going to talk about actually automating your strategy, how to turn it off and on, and how to set it up so that you can have a trade planned days or weeks in advance and not engage your money in an order until the price is close to your entry level. See you in the next video.